As I mentioned, this is our first attempt at the webinar, and we are discovering that it doesn't work in the combination of the cloud too well, so we had to do it a different way. Our apologies. But anyway, as I mentioned, we are going to be recording this at the end of the session. When we stop recording, we'll then open it up for questions. So you think independent contractors, not employees. How did I get into this presentation, and what even got me thinking about it? Actually, when I started my career, I did work at the Internal Revenue Service. I was an auditor. Don't hold that against me. That was a long time ago, and that was only for a couple of years. The process on picking out independent contractors and employees was a little different than what they do now. It was a little looser, but the theme of it is we would go out, and in the context of doing an audit, we would then start taking a look at the people that they said were independent contractors. We would set up the cases. There used to be a process where you could get a credit if the employees had filed their tax returns and they had reported their independent contractor income, but guess what? They never had done that, and so therefore the withholdings that the employers had to pay were quite a bit. So it was a quite expensive proposition. Processes are different, however. The question of it is that why is all this going to be important? Well, what we're going to cover. First of all, why the IRS, the Department of Labor, and just about everyone else wants your people that are called independent contractors to be employees. Then we're going to talk about why independent contractors want to become your employees. Yes, you hire them as independent contractors, but then what happens is that they leave, you terminate the relationship, and lo and behold, they all of a sudden have this inspiration that they were really your employee all along. Why? Well, because you should take out withholdings that they didn't take care of themselves, that you should have been paying different Social Security taxes. And you're going to find out that there is a process here where the IRS and your ex-independent contractor are now desiring to be a employee can actually join forces. There's actually a process for this where they can literally go rat you out if they want to do that. So there are some lingering problems that you can have for your people that you purport to be independent contractors. Now, here's a few interesting cases. And by the way, I'm not really going to try to give many specifics in here, and there's a reason for that, is that every case is so different that it's almost impossible for me to basically come back and give you the factual situation. So I'm going to give you the framework on this. In fact, we may even come back to this. But look at these big companies here. Nokia hiring from third parties. In other words, they went and hired some third party to hire the independent contractors, and then they basically subbed out from that independent contractor firm all these different people, thereby getting invoiced, and then also the amounts of the 1099s went from that third party. Didn't work. Microsoft freelancers back in the early stages, they were called freelancers, but they showed up at the place, they did programming, they followed the processes that they had, they were found to be employees also. FedEx delivery persons, there's been some challenges on that. You may have seen that in the news. Why did these FedEx delivery people want to be called employees? Because they wanted the benefits. Now here's one, freelance strippers. How in the world would you call them a freelance independent contractor or not? Anyway, there's a chain of nightclubs in Dallas owned by an individual, and the freelance strippers, they decided to sue him to be called an independent contractor. Then also Google being sued by contingent workers, a fancy word for freelancer independent contractors, and Uber, who hasn't used Uber before, where basically you call a cab up on your iPhone. They have a process all put together, and what happens there is the question is, are they employees or independent contractors? And that is a challenge just going right now. And lo and behold, cheerleaders from Buffalo Jill's Cheerleader suing the NFL, saying that, hey, we're not independent contractors, we're employees also. And if you think about that, the employer or the purported employer tells them when to show up at the game, and probably tells them what cheers and things like that to be using, probably tells them what uniforms to wear. So as we go through some of these criteria that we're going to take a look at, you might start detecting yourself as to maybe the Buffalo Jill's cheerleaders, maybe they really are employees and not independent contractors. Okay, and by the way, everyone's getting on the action. You know, they're trying to increase the wage level or the payment level for who is subject to overtime. You have Obamacare, 30 hours. Everyone's trying to find ways to get around that, but of course they have more heightened interest in trying to catch people who are trying to call people independent contractors. The Department of Labor has actually awarded over $10 million to 19 different states to beef up collection matters, and what would be incomplete if we didn't have this in the governmental agency, bonuses will be paid on performance. So the more people that the government can come out, the Department of Labor can come out and get your people reclassified as employees, there's actually a bonus, there's an incentive plan for them for that too. So you're going to have lots of forces working against you on here. What's being proposed? A payroll fraud Prevention Act, okay, of 2014 that has not gone through. Basically misclassify workers, and it can become a federal offense. This is not law now, but the idea is that you innocently misclassified them, it could become a criminal offense. And also, too, another proposal that's out there, a requirement to provide written notice to the worker on how to tell on you at the Department of Labor. Right now, people who want to, quote, tell on you have a little bit more work they have to do, have to figure out how to do it. So this is one of those notices that you hang up on the wall. This would be one you'd add to it. So you can see where the movement going. There's billions and billions of dollars for the government out there, and what government isn't looking for more money? So do you think this is becoming a serious issue? You bet it is. Okay, now we're going to take a look at why you don't want your independent contractors to be employees. Well, let's face it, if you hire someone just to do some deliveries for you, someone on a short-term basis, it's a little bit of a hassle to call them up, put them on payroll, do workman's comp. There's a little bit of paperwork that's a hassle. So a matter of convenience, you might actually just not want to do it. Then the problem of it is you keep on retaining the person more and more, and next thing you know, they become an employee for you. So there's a reason why you don't want to do it. I'm not saying it's a correct reason, but there are some of the motivation aspects right there. And let's face it, there are some savings. You don't have to pay the Social Security taxes that the employer pays. You don't have to pay the unemployment taxes. You don't have to pay overtime. You don't have to worry about pension plans. You don't have to worry about health insurance plans, which, by the way, are all the reasons why your independent contractor, especially after they've left your employment, would actually love to become an employee of yours. So there's motivations, but these motivations really work both ways on the side of the spectrum. Okay, what's your risk that you're going to have? Well, let's say you have an independent contractor and it turns out they're an employee, and assume you have an audit, assume they catch up on the whole thing. You have back taxes, penalties, fines. Okay, you also have accountants and attorneys that deal with all these issues for you. There could be personal liability. You might be incorporated, and you might discover that you have a bunch of Social Security taxes that you have not been collecting on these people, and they can pierce right through your corporation under normal trust doctrine theories that they use this on. Everything, too, you may have unemployment claims that are made, workman comp plans or claims made, and also, too, maybe your plan that you have, maybe it gets disqualified. Maybe it's not just an issue of you have to now include this person in your pension plan. Maybe it becomes the issue that your plan gets disqualified. Now, do all these things happen all the time? Absolutely not, but this is the risk paradigm that you have when you're really using people as independent contractors, and maybe they're employees, maybe they're not. The moral of this is you need to have this independent contractor be a thoughtful analysis and document it before you take those positions. Okay, I'm going to take a look at here a little bit at the IRS test. There is lots of literature out there, and I'm going to show you an IRS form, and we're going to highlight a few items in a few moments. So let me just kind of give you a basic thing. Behavioral control. They look at behavioral, financial, and relationship of the worker in the firm. We're going to talk about those more, but the behavioral control is, do you have the right to direct and control? Not do you direct and control. Do you have the right to direct and control? Someone who's working at the front desk of your retail operation, obviously you would all agree you have the right to direct and control them. But maybe someone who is doing some deliveries for you, or maybe someone who is a subcontractor who's working out of their truck, but they're not really in business for everyone else, they're only working for you. Do you tell them what time to show up? Do you tell them what time they're done? And things like that. Financial control. Do you have the ability to control the business aspects of the worker's job? For instance, do you have the ability to tell them how you're going to do the job? These are the ways that we do our processes. We want you to follow our process. Maybe, again, construction could be an example that you have certain steps and procedures that you go through and you control it versus they just simply get the job done by the date that you've agreed to. Maybe there's some penalties in your contract and maybe there's a little bit of supervision on your part as to the quality of the job, but it's up to them to staff it and figure out how they're going to do it. And the relationship, the work of the firm, how is the relationship anticipated from the beginning? Is it anticipated to be long-term? Is it anticipated that you're going to have control over what's happening? Just drill down a little bit on a few of these behavioral. These are not totally exhaustive. And I'm going to show you the IRS form where you can inquire yourself as to whether you have employees. Employees can use it to, quote, rat out on your independent contractors. Or it could be a form that is helpful for you just doing your own analysis as to determining whether you really have independent contractors here. Look for specific training, control over how you're doing things. Are there regular reports that have to be filed? Where's the location? Is that your facilities? If it's usually at your facilities, that's a negative item. By the way, in all these things we go through, they're looking for the preponderance of, the weight of these. There's no one area that is more required than the other. For instance, someone works at your location, but they're not required to do a report. The location would be more prevalent here. They're required to attend meetings. We all, don't like having meetings, but you require them to come. And the ability of the worker to hire a substitute, now that would be a plus, wouldn't it? Because the worker, maybe if they're an independent contractor and they're only supposed to get the job done, have the ability to go out and perhaps hire other people to do the work as opposed to them. Financial control. Who provides the supplies, equipment, materials, and property? They provide their own tools. That's a plus for you. It's not a slam dunker. It's not a home run. It's just a plus. You provide the inventory that they're going to use. That's a negative. Okay, they supply the tools. They provide the materials. That's a plus for you. See how this is just work pluses and negatives. What expenses are incurred by the worker? Most employees really don't incur many expenses. If they do, they get reimbursed. Are they being reimbursed for their expenses, or do they really have some of their own expenses that they have coming also? How is the worker compensated? Do you pay them hourly? That's not good. If they're paid hourly, paid on a job basis, that's better. Whom does the worker pay, or does he have other people? Do you have workman's comp for the worker? By the way, here's another issue for you. Treat someone as an independent contractor, they get hurt on the job, and all of a sudden they want to be an employee, so they get workman's comp, but you didn't carry their workman's comp insurance. It becomes your problem if they're successful. How's the relationship ended? Can either party fire each other? That's a sign of an employee versus they get fired because they didn't perform on the job. And the relationship of the worker and the firm, what benefits are available to the worker? Are you providing many benefits at all? I would suggest if you're going to maintain someone who's an independent contractor, you actually don't want to provide them any benefits, but that could be detrimental. Can the relationship be terminated by either party without penalty, something we just talked about? Does the worker provide similar services for others? That's a plus for you if they do. However, the IRS, when you use this as a defense, wants to see, well, what does this person do to promote themselves? Are they really holding themselves out to the public? True, you may have a written agreement with them that says they are free to provide services for anyone else, but if you're keeping busy 40 hours a week and they aren't working for anyone else and they're not even trying, that could be a little bit of a ruse. But again, are they able to do that, and what's the practicality? And how's the worker represented to others? Hey, John here is our associate. Well, John, the independent contractor, might actually become an employee under that presentation mode. Okay, there's a couple of reliefs here. I just want to mention them for you. I don't suggest you bank on these relief provisions. These relief provisions are pretty much tools that you can pull out of your pocket and hope they're going to work. In 1978, there was a Section 530 relief, it was called. Section 530, for anyone out there who thinks Internal Revenue Code, it's not. It's a tax act. You won't even find this one in the Internal Revenue Code. There's been many, many attempts to repeal it, and you don't have to be a betting person. given the way that the government's looking for money, given who is in control right now, I think it's a safe bet that Section 530, even though it's been around since 1978, probably is not going to last. Now, here's what the requirements are. You have the audit, and they say, hey, we think you have independent contractors that are employees. They're required to give you a pamphlet that spells this out for you. And here's the things that you can use for the safe harbor. Reporting consistency. Have you always given them 1099 forms? That's a plus. If you have not consistently given them 1099 forms, then you're not going to be able to use Section 530 as a relief. Okay, if that's correct, then the next question is substantive consistency. Are all workers in a similar situation treated the same? John works at the front counter, Jack works at the front counter. John's an employee, Jack's not, at least according to you. You flunked on that because the ones that are in the similar situations are not treated the same. The next one you have is the reasonable basis. So now you pass these other ones, and the reasonable basis is made upon when you secured them services, not upon the audit. And here is reasonable basis. You had a prior audit on this issue, and the IRS agreed with you, so they don't get double jeopardy on that one. Another one is there's a prior case on your case. This is where some research comes into place. Here's another one, recognized industry practice. Now, I have it there in red. Good luck proving this one, because what it is that, you know, how many other people in the industry are doing the same thing in your geographic area? Well, how many people in the area in the same business as you are going to be a willing participant in a survey saying, yep, we have these people as independent contractors? And remember, the burden of proof is on you to prove this. Now, you may have some trade publications. Someone in your area may have done surveys with their association. You may have that. You may find a court case somewhere where someone was able to prove it, but this is truly an uphill battle. And as soon as you say everyone does this, then the burden of proof is going to be on you to be able to prove it. The next is other reasonable basis. You can see these are not crystal solid criteria. You certainly can use these defenses. You can try them, and if the IRS audits you, they may be persuaded that you have what they call in their manual colorable arguments, and they may give you a little bit of a deal that you don't have to pay all these back taxes. They may say just pay 25%, because they're sitting there gauging that if you go to court yourself, will Section 530 prevail? So everyone knows if anyone goes to court, tax court, there's always a possibility, no matter how solid you think your case is, there's always a possibility that you could lose the case. Both sides know this, and so therefore sometimes you negotiate. But again, not enviable positions to be in. If someone is really going to be an employee, maybe you're better off just calling them an employee up front. If you're going to maintain someone's not an employee, then have a file of research that your lawyer or your accountant or someone has done for you that gives you a reasonable basis, at least in the argument, as to whether these are employees or not. Okay, how the worker can cause you problems. Two ways. First of all, they can file an 8919. Well, yes, we've had people come in here and they say, I have a 1099, and it seems to me I was an employee, and the question of it is what can I do about it? And the answer is, well, we can use Form 8919. I won't go over that form. It's not always a automatic they can use it, but it's the mechanism for a disgruntled ex-employee. The one I could think of was it was the son of a client who basically worked at one of these pizza places, and they didn't make much money, but you know they didn't have the Social Security withheld, and they said, do we really have to pay self-employment tax? And so it's, hey, we could file this 8919 and see what happens. Now, what also happens is they file an SS8, and the worker files the SS8. Now, it's the same form. I'm going to show you that in a few moments, and I have it as an exhibit because it is a good checklist for you to start going through and say to yourself, how would I respond to this? This form, by the way, is a form that either you can submit asking for a determination from the IRS, or it's one that this worker can submit. I would dare say most people are not going to submit this as employers because why would they want to basically start with that whole process and create problems for themselves? Okay, what happens if you have an audit? There's a few things. There's a classification settlement program. That's where they will use a discounted amount, 3 years worth of taxes as a settlement rate. If you want to throw up your hands and say, I give up, you could try to negotiate a deal with them, but your exposure is 3 years worth of withholdings, Social Security taxes, then the state will get in on this, and then the Department of Labor will get on this also, but there is a substantial taxes plus all the penalties that go with it. You can attempt to prove your case and win. You just go for truth and justice and just go for it. You could try to use Section 30, and you could try and negotiate off that, or you could simply lose, and you could pay a lot of penalties, taxes, and fines that could go with that at the same time. Okay, let's continue down here to the next slide, and there we go, I got it. Okay, there's another program too that is out right now. It's called the Voluntary Classification Settlement Program, and in the Classification Settlement Program, you basically you're not admitting that these people were not employees. You're saying, I'm just simply going to agree that they're employees. And in order for you, the IRS, to not come in and audit me, for you to let me take advantage of this, I'm basically going to pay a very low amount of what the withholdings and the tax rates would have been on those particular people that I am now going to reclassify. I did an example. I'm not going to show you the tables. If this was an accounting group listing in, I would show you all the calculations, everything. But it's basically provided a reduction rate to 10% of 1 year's missed withholdings, including the Social Security taxes, based on the already low statutory amount. You can see what they're trying to do. They're seducing you is what they're trying to do here. And so here's an employee with $1.5 million in worker 1099 compensations, and they say, starting next year, I want to basically call them employees, and the tab on this one came up to be $15,420. Guess what it would be if you had an audit? Well, 10 times that for 1 year would have been probably about $150,000 times 3 could be $450 plus all the penalties and taxes. You can see the seduction that's going on here with the IRS trying to get you to agree to this particular process. Now, I'm not a lawyer here, but I would throw this out. This seems to be a safer way that if you have someone that you think maybe is an employee, you don't really have to admit it. You're just saying, I agree to have them be that way. Whereas I think if you're lost in the case, then the question would be is that the person had been hurt on the job, past workman's comp, pensions and things. Maybe if the IRS comes in and audits you, it's a lot more onerous because now if they have decreed and you have agreed that this Jack was an employee for the last 3 years, who knows what that's going to open up in the non-tax area for you at the same time. Now, interestingly enough, the IRS does statistics on how many people have been filing, and very few people have been making use of this program. I'm rather surprised, and so were the commentators, and they keep on extending the program because they haven't had a lot of takers. Whether they haven't promoted enough, whether they just think they're going to be successful, anyhow, I don't know. Okay, and then I thought attached to this slide was a handout. Let me just check with my assistant here, and he's pulling it up on the screen. There we go. Okay, so everyone can see that. This is a SS8 form. We're not going to go through the whole thing. I just want to highlight a few things, and now that you have this available for yourself, you can use this a little bit as a guide in your own self-determination as to what exposure that you think you might have. You take a look at number 2. Explain your reasons for filing this form. This is part 1 too. You believe you've erroneously received a form 1099 and you're unable to get workman compensation benefits. So that sounds like they're inviting the employee to tell you. Remember, this form can be done by both persons. Let's just take a look at another slide here. Oops. Let me get my system here. I just lost my slide here. There we go. And there we go. I got it. Okay, let's take a look at another one. They talk about general information. And they start taking a look at, let's look at 10, Part 110. Did the worker perform services for a firm in any capacity before the services that are subject to termination's request? There was a question there. I was going to make a point of it, but I don't recall that was the issue I was trying to make. It's actually 11. Is the work done under a written agreement? I would suggest that if you're going to have people who are independent contractors, at a minimum, you have some written agreement that includes their ability to do things in here that would suggest that they're not. This doesn't nail it down, but you can see right there, Part 1, they're saying, let's take a look at the agreements that you might have. Part 2 talks about behavioral control, and again, I'm only going to highlight a few of these. I have on my own slide here in yellow for myself. Let's go to Part 3. Part 3, and on that one, let's take a look at 9. What economic loss or financial risk, if any, can this worker incur beyond the normal loss of a salary? For instance, they'll do a job for X number of dollars. Well, if they run over, they could lose money on it. If they do better, they make more of a profit. There is a financial risk. That's a plus for you as an employer, that indeed these are actually independent contractors. Let's look at the relationship as 4. 1, please check the benefits available to the worker. I found that kind of interesting because if someone was 1099, I'm going to presume that none of those are available. But if you're going to try and maintain someone's independent contractor, make sure you at least don't offer them any benefits. 5, are they members of the union? Actually, that's a real plus for you. It seems like there is many exceptions that people are members of the union. And 7, the worker assembles a process or product at home. Who provides materials and instructions? So see, a lot of people think, oh, this person works at home. They work on their own. They just swing by here and they pick up their supplies and the materials from us, and then they go back to home and they assemble the product. Again, where's the risk here? In fact, you are providing materials and supplies. That is a negative that's looking for. Now, by the way, they don't tell you what's negative or not negative on each of these. They're basically just asking the questions. If you take a look at Part 5, down at the bottom, 10, 11, 12, 13, those are questions that have to do, and I did not really mention it, there are a handful of statutory items provided by the code that basically are statutory employees or non-statutory employees. Example, just one example, statutory employee, full-time sales insurance sales agent. That is a statutory employee, full-time, not someone who sells insurance and a lot of other products, just simply life insurance. As far as a statutory non-employee, qualified realtors, people who are selling, who basically go out and get their businesses, but they work through a brokerage agency. You don't have an argument there because it's statutory. You can kind of guess that the non-statutory employees, and there's only about 4 of them, probably came as a result of some trade association lobbying, and of course the real estate group would have been one on that. So we're going to, in a moment, I'm going to stop recording and open up for questions, and that way you feel free to ask whatever you want to. But again, just to summarize on this, I can't really tell you whether someone is an employee or not, but I can tell you this, when, and I see it on tax returns, I see this word called independent contractors or subcontractors, and they're big numbers. You can guess that if I can see that on a tax return, so can the IRS. So now the question becomes is, if you have a big number of independent contractors on your tax returns and you see what the environment is, you see some option here, now's the time to step up to the base with your accountant or the attorney, go through here and start making informed decisions as to A, should you change your thinking process and call them employees, or B, do you want to continue maintaining independent contractors, and many of them may be independent contractors, then what are you going to do to bolster your position so that when probably the inevitable claim eventually comes from someone, the government, from the ex-disgruntled independent worker, will you be prepared for that? Okay, let's stop the recording and we will open